I'd like to get started and, straight away by inviting the panel to perhaps start with a quick introduction of themselves and their institution, and maybe to briefly touch on a simple question before we go into any depth. If you took a snapshot of the Saudi Arabian banking sector 24 months ago, and then you looked at it today, how would you say the sector's progressed, and how does it look in terms of health? So perhaps, Abdul Mohsen, I could start with you.
بسم الله الرحمن الرحيم. عبد المحسن الفارس, الإنما Bank. Regarding your points, I think although the world situation today, we are seeing Saudi banks is growing for the last 2 years, in fact for the last number of years, but last year 2011 comparing with 2010 did grow, if we look at financing, for example, by 12%. Yep. And others, deposits is growing. So I would say we have very healthy financial sectors today comparing with 2 years ago.
Yeah. Yes, sir, maybe I could move on to you.
Bismillah ar-Rahman ar-Rahim. Yasser Sharif, CEO of Manafع Holding Company. I believe if there's any sector benefited most from the flourishing economy, Saudi economy, that would be the financial sector. The financial sector is a sector that funds the whole growth and flourishness in the economy. Financial sector is well capitalized and has a massive potential, although we have some headwinds and challenges ahead with regards to growth. But overall, the financial sector came way along in the past 2 years or so post the financial crisis. Thank you.
Very good.
Good afternoon, everybody. My name is Boutros Klink. I am the CEO for Standard Chartered Capital in Saudi Arabia. Just a couple of points on our bank, because from talking to some of the audience and the attendees at this conference, a number of people had not heard of us in the past. We are a large international bank with around 87,000 employees operating in 71 countries. We focus on emerging markets, primarily Asia, the Middle East, and Africa. We are the only international bank that has been upgraded by the 3 ratings agencies over the past, since the beginning of the financial crisis. And, we are the sponsors of Liverpool. So a lot of people have stopped, at the booth a bit earlier on. Regarding the financial sector in Saudi Arabia, I think it has fared really, really well, leaving banks with enormous amounts of liquidity, which puts them in a very good position to basically capitalize on all the development that is going to be taking place in this country.
Very good. Whilst I take your points about the excellent state of the bank, I might remind you that Chelsea won the FA Cup. But, anyway, I'll move on now to Daniel. Perhaps you could introduce yourself and give us your thoughts.
Sure. Good afternoon. My name is Daniel Cowan. I'm head up the equity research team for Morgan Stanley International, based in Dubai, covering the Middle East, North Africa region. As far as the banking sector in Saudi Arabia goes, I think compared to 2 years ago, we're obviously in much better state. I think the banks themselves have learnt considerable lessons, particularly on the risk side, with regard to managing those risks since the dark days of 2009, 2010. And I'd also agree with Dr. Boutros here that the participation now in the economic growth of Saudi Arabia is now considerably higher than it was back in 2009, 2010. So very much feeling that the Saudi Arabian banks are there not only stronger but also better placed for growth than they were 2 years ago.
Great. Eric, maybe.
Yes, my name's Eric Swatz. I'm head of asset management at Rasmala Investments. We operate in Egypt, Saudi, Oman, as well as the Emirates. When we look at the banking sector here and the listed companies traded on the Tadawal. While there is a great improvement and the banks no doubt are well capitalized, we see greater opportunities in banks in other GCC countries. So we are, I would say, under-invested into the Saudi domiciled banks and over-invested in banks, particularly in Qatar.
Interesting. Perhaps, Abdul Mohsen, I can start off by asking you, I think, one of the key topics that we're going to cover today, which is the Saudi banking sector growing sufficiently in a sufficient pace to keep in line and to support the kingdom's mega development? I mean, these enormous projects and the need for capital therein. So perhaps you could tell us where you think that we are in that perspective.
Yeah, to answer your question, first of all, we have to say KSA budget today is the largest ever in the history. Government spending is so huge, and local banks are benefiting from that definitely, yet the financial crisis happened. Some international banks now not supporting the GCC in general as used to be, and Saudi banks took advantage of that. I would say the growth, fortunately, Saudi banks will capitalize, capable to fund this. Is it capable only to fund the whole mega projects? I would say no, but we have to consider public funds, we have to consider capital market, we have to consider also the financial institutions together, and hopefully this will create a lot of opportunities to local banks.
Boutros, maybe you can talk about the way you think this would play out and whether the domestic banking sector, how much of a role it can actually play in tandem with an international component.
I think that at this point in time, given the huge amounts of liquidity within the financial sector in Saudi Arabia, and given the high cost of funds for some of the international banks, then definitely we feel that the international institutions are a bit at a disadvantage. However, when we look at some of the projects that are taking place where the maturities of the required funding is 15, 20 years, that is a very, very long time, and suddenly the exposures of the local banks to those large projects is going to be quite huge, and it will put a bit of stress on the banks. So we definitely need a development of the capital markets, and we definitely need some form of diversification of sources of funds, which basically, generates a more sustainable infrastructure, creates a more sustainable infrastructure for the growth and development of the country and the financial sector.
Yes, so you'll have a good understanding of this. How much can we lean on the domestic banking sector for help in this area?
Well, I think it will become a major challenge going forward for the banks to catch up with the growth we see in the kingdom. And that's mainly for two reasons. First, capacity constraints, but that's a lesser of a problem. Banks can issue sukuk, for instance, can raise capital to fund the growth and the loan book. But the major problem would be over-regulations and sticking, for instance, to Basel III, which is an extension of Basel II. And that will really form a major obstacle. The question would be, would Saudi banks need to be resilient enough, well capitalized, with a huge amount of liquidity as the developed countries? That's a very important question, because we have two objectives here. Emerging markets, Saudi markets is part of the emerging markets, and the advanced economies. The objective of advanced economies with regards to Basel III is to curb the over-trading and to prevent or avoid financial crisis from happening again. So the risk appetite is different than the ones we have in emerging markets. Emerging markets risk appetite is to continue the stable growth in order to meet the needs for growing and expanding population. I think it's a matter of striking the balance between the resilience and strength capitalization of banks and growth. And this is the next challenge.
Very, very good point. Daniel, Saudi Arabian banks that just want to lend to good clients and help the economy are being penalized by developed market gamblers, and these requirements are just not relevant. Discuss.
I think, I mean, let's put it in context. We have, what, $450, $500 billion worth of projects to finance. If we assume that the average project would contain equity of maybe 20-25%, that leaves roughly 400 billion of funding to find from non-equity sources. The entire Saudi banking system has loans outstanding of roughly 300 billion. So that just gives you an idea of the magnitude of the challenge facing the Saudi banks at this stage. So, as my honourable co-panelists have already stated, I think diversification is the key. International participation cannot be avoided. The Saudi banks themselves are in great shape. They have excess capital, but even that is not sufficient to satisfy the huge demand for funding that is likely to happen. Perhaps one way to overcome the issue might be increased use of project bonds by the authorities. I thought the GACA Sukuk in January was a fairly innovative step by the authorities. Allows wider participation not only from the banks but also within the financial services sector. So I think there's no silver bullet, but clearly it's going to take a lot of different sources of funding to satisfy this demand over the long term.
I mean, we'll get on to capital markets and Islamic finance in greater detail, but it's a very good point. But Eric, these sort of headwinds that we're talking about, are those specifically the reasons why you're a little cooler on the Saudi banking sector, or are those
well, what we see is that by and large, the Saudi banks have become more conservative over the past couple of years, focusing their lending activities on corporates which are embarking on government-orientated infrastructure and development projects. As a result of that also, we're seeing that the banks, and some of them in particular, are bumping up against single obligatory limits, and so their ability to grow through this channel is starting to become quite restricted. And we've talked about Basel III, this as well. Will put additional pressures on the banks to mitigate or control or manage somehow the lending to different corporates, which is then leaving really just the retail segment of the market for these banks to continue to develop their own growth in assets and growth in earnings. And I think the points that have been made in terms of further diversification, further funding sources are quite accurate. And I think we've seen a number of those instances over the course of the year where we've seen a lot of sukuk issuance and other fixed income issuance in the public markets, allowing these issuers to access debt capital, which the banks are not in a position to meet.
Very good point. I mean, Abdul Majid, maybe you could come in on a couple of these points and maybe talk a little bit about the resilience of the banking sector in terms of oil price, its exposure to this government spending trend. Perhaps you could give us a little bit of context.
Yes, Mike, before, let me just explain something, In March 2012, total financing of the banks did grow by about 10%. If you see, the total number is around $300 billion Saudi banks. So there is big growth. If you look at the deposits with the banks, which is the major source of funding, did grow about 10%, 9.9%. So total commercial banks in Saudi Arabia deposits is around $306 billion. Total financing is around $299 billion. And we have to understand something here, which is the situation in Saudi Arabia. Most of infrastructure projects coming from public sectors, from governments, semi-government institutions. And they are paying, advance payments, which is 20%, okay, to that project. And that payments goes to the banks and then in the circle. So I would say the most challenging is the mismatch between assets and liabilities. So because most of liability side is short-term, current accounts and others, year and less. Most of the financing is long-term, and this is a big challenging. Back to your question about oil price, we think today in Saudi Arabia, I would say, is much better than 10 years ago. If you look at public debt, went to less than 6% of the GDP. Government reserve is increased. So that will give us assurance about sustainability within the short and mid-term, because even if oil price goes down, even if the government revenue will go down, they will have other capability to raise fund to fund such projects. So I would say we will be fine within the next 3 to 5 years. What after that? Yes, I agree, that will be other situation. Again, to the banking sectors, banking sector is one of many funding resources. So as been mentioned, capital market, mutual funds, which has been established lately in the last 5 years, contributing a lot, as well Sukuk issuance. We have about $6 billion in the first, in this year as issued. And those together will help funding the mega projects that we have currently.
I think we're naturally progressing on to the topic of capital markets. So we'll probably come on to the labour market a little bit later. But who would like to kick off on how far we are down in terms of the legislative situation here and whether it's conducive to the growth of this Islamic finance source of funding?
I think one of the key issues for Islamic funding has been the lack of standardization across international borders, and I think that has historically been a limiting factor. Sorry, as I was saying, I think one of the main issues that has limited the growth of Islamic finance has been rather the lack of standardization of Islamic products, which has limited some of the cross-border appeal of these products.
Yeah, but the liquidity is there, so surely.
Yeah, I think what has happened this year is really phenomenal in terms of the GACA issuance at the beginning of the year, which sets the stage, for the development of the capital markets. It was definitely a very big step. Also, the fact that it went to the 10-year, which with the government support, it creates some form of a benchmark curve off of which other issuances can be priced. That is definitely very positive. As of now, there is like a scarcity in terms of the instruments for people to invest in, and this is why we see a challenge in terms of developing the secondary market. But it is the first step forward. Moving forward, in order to get a fully functioning capital markets, I think the secondary market is essential. As more and more bonds get issued, as more investors get involved, it is only a matter of time, I think, with the proper infrastructure in place, that the secondary market develops, and then it will be a tremendous source of another source of funding for many of the projects. And if we look at some of the countries around the region and we look at how their capital markets have developed, and we only have to look back a few years to see how the markets have developed in places like Qatar, in places like the UAE, etc. It should tell us what is the potential, and given the size of the kingdom, I think this market can dominate the rest of the capital markets within the region.
Mike, also, if you allow me to add, if we look at what type of law is being issued lately, one of which is very important is framework for sukuk issuance that issued by CMA, and that will help for more sukuk. And I agree totally. We need to develop the secondary market for sukuk. If we look at the non-interest-bearing accounts in local banks, for example, why should I put my money in non-interest-bearing accounts if I have other investment opportunity with low risk? If we develop the secondary market for sukuk, that will be big source of funding as well big source of investment opportunities for individuals.
Mm-hmm. Yes, sir.
Yes, I think this is the best time for corps to issue sukuk. Given the flourishness, given the economic situation in the kingdom and the low rates going forward and the low cost of funds, corporates are in a very unique position to issue sukuk. They basically enjoy the low interest rates or the murabaha rates and then swap it to lock up the interest rates. And we have seen number of sukuk, although in a shy number, but coming into the market. And that's, for instance, if I quote names, Kingdom, Mara'i. So we're seeing more, but we're looking to see even more into the market. The appetite is there. Maybe it was subdued because of the rally we have enjoyed in the stock market, but of course it's an important investment class, and I think we will see even more going forward.
Okay. I think we're starting to get onto, getting more vibrant funding market and financial sector, and maybe that moves us on to the situation in investment banking in the domestic market, which got off to a flying start, has had what can safely be called a correction. So perhaps Abdul Mohsen, I could ask you, how do you think that development's gone? How positive do you feel about the future, or what do you think a sustainable development of an investment banking domestic sector would be?
Yeah, if we look at, back for 7 years ago, you will find almost no investment company being licensed. We didn't have law and regulation to license investment banking. Today, with the CMA being out in 2004, we have more than 100 companies being licensed. And so huge investment companies come into the market. Competitions become so high. I am expecting a lot of merger and acquisition among those companies. Some of them start to face some difficulties, but yet is also created a source of funding, especially through the mutual funds and other opportunities. They had some opportunities, business type, IPOs and others, but I agree totally. Investment banking is not well developed in Saudi Arabia. It started big steps, yet need a lot of time to be well developed.
Does anyone want to jump in on the local scene?
Definitely, like it's a new, like even with the CMA, it's a new, relatively new entity. So even the regulation is still evolving, a few years into the existence. I think when when they opened up, the issuance of licenses, a lot of people thought, okay, let's acquire all the licenses. And suddenly they were looking and scratching their heads saying, okay, what can we do with those licenses, and where, can we, establish viable businesses? However, what we've seen from, as, Mr. Abdul Mohsen has said, is that the number of entities that were licensed mushroomed initially, and then we're going through a phase of consolidation as people are looking at the business models that they have, initially put in place that, resulted with some challenges. Definitely the collapse in the Tadawul in 2006 and the financial crisis globally did not help the evolution. However, what we're seeing nowadays are people being and entities being a lot more selective as to, you know, the types of businesses that they would like to carry out, and you know, spending a lot more time identifying the edge that they may have in this market. Like if we take a typical example, at a certain point, I believe we were at around 130 entities, and each one of the entities felt they can do 1 or 2 IPOs per year. If we look at the number of IPOs that took place last year, you know, it's only a handful. So definitely in that respect, like some of the initial models that people had to be revisited. But moving forward, I think the regulation is evolving, the infrastructure is evolving, and I foresee a bit more consolidation in that space. However, you know, in terms of growth of the capital markets relative to the traditional banking sector, I see a lot more growth in the capital markets over the coming years.
Yeah, Eric, maybe I could hand over to you.
You know, we have seen the overall amount of fees through investment banking in the region come down quite dramatically. First quarter numbers around 50 million a year ago, double that. So, you know, the overall environment for investment banking activities and revenues has been declining. And while in markets outside of Saudi Arabia, international firms very much sum up the tops of the league tables, Saudi Arabia is still very much a private market with much of the corporate equity held privately, and therefore much of the times it's relationships that will drive the activity for investment banking activities. What we've seen is an opportunity for those global banks with local investment banking activities here to take advantage of the relationships they have and the global name and brand and recognition and expertise that they're able to bring to the table to support their own activities. But I think it's important to note that the overall environment has been quite shrinking over the past year.
Yeah, and for you, looking at it as a market, what are the things that you think need to change first for you to get more excited about it as a...
Well, I mean, the regulator could ease the requirements for foreign players to come into the market. And through such easing, there would be more competition, more activity, and maybe a lifting of the overall playing field with the introduction of more foreign-based firms.
Yeah, and also, I mean, just generally, the Chinese model has been brought up in this market. You know, perhaps Daniel, your thoughts on opening things up, making them more vibrant, encouraging investment.
Yeah, I think the opening up the capital markets to foreign institutional investors is certainly something that would be a positive step. I think one of the reasons, though, generally that the investment banking market is relatively small in Saudi Arabia is partly because the domestic institutional investor base is relatively small. And in a market where you can subscribe to an IPO through an ATM machine, it kind of cuts out the bread and butter business that an investment bank would typically do, particularly with regard to equity markets. So it's definitely there's no one thing that I think could change things, but certainly the Chinese, the Indian models could certainly help increase the institutional investor base. International plus domestic combined, I think, could certainly create a virtuous circle where we would see growth in the institutional investor base, which would certainly help with the opening up of the market and ultimately, I guess, investment banking income.
Right, very good. Perhaps we can talk a little bit about the external environment and how that relates to the Saudi Arabian banking sector. You know, foreign banks cutting their lines, you know, so much volatility, and perhaps a great focus on risk management generally, whether you're creating risk or mitigating it. So perhaps, yes, how do you feel the situation is in terms of risks, opportunities for the Saudi financial sector?
I think it's a great opportunity for Saudi banks to bridge that gap after the major players in the market have cut their credit lines to finance the big Saudi corps. But going back to the investment, international investment vis-a-vis the domestic investment companies, I think international investment companies are inferior to the local or domestic investment companies for a number of reasons. First, international investment companies are not risk participants. They're well known for being liquidity vacuum. So they deploy the liquidity in international capital markets, etc., not adding much into the economy. Secondly, there is the issue of providing Islamic solutions. And there's a lot of challenges and headwinds for international players to come and deliver a genuine product that are Sharia compliant. Their mindset is to take a conventional product, wrap it up, paint the ugly parts, put the rubber stamp from the Sharia school or whatever, and then sell it to investors. And markets is a little bit skeptical with the Sharia compliancy. And thirdly is a cultural thing in terms of transparency, KYC, etc. So back to your question, I think it's a magnificent opportunity for the local investment banks. We have a huge amount of companies in the pipeline waiting to be listed, IPO, turnaround of companies, corporate governance, consultancy, etc. So there's a huge room. I'm optimistic when it comes to the economy and the role of investment banks. They had a tough time before, I mean, with the financial crisis. Big banks hardly survived financial crisis. I'm optimistic going forward. It's a huge role for them to play and more money to be made.
Does anyone want to come in? Abdul Mohsen?
Yeah, Mike, I think fortunately what reduced the impact of cutting lines from international banks, one is government revenue reached the highest ever in the history, and as well government spending. So maybe this is indirect, but we didn't see it. A lot of liquidity available for local banks. If we see the competition about getting, even the cost of fund went so low, and that's one of the indication there is capability and ability of local banks to fund feasible and good projects. In addition to that, approximately the total funding coming from international and financial institutions to the region around $226 or $7 billion, and that represent about 10% of Saudi GDP and about 25% of UAE GDP. And we will see, fortunately, more development in the capital market. If this situation happened 7-8 years ago, we wouldn't see the sukuk issuance as we are seeing today. First quarter in Saudi Arabia, we have $6 billion sukuk issues, which is filling that gap, as well many mutual funds coming. And I would say we are fortunate about the timing.
Anyone else on this topic?
I think that when we look at the international banks and their involvement in the region, we need to look at one, the domestic economy, and two, links with the rest of the world. From an international bank's perspective, although during the financial crisis some have suffered, and for various reasons that have been properly articulated. Some other banks have really evolved, and like with their assets growing, with the amount of funds that they have at their disposal to to invest globally have increased. Banks like Standard Chartered, for example, we have done really well during the financial crisis, and some of the key features was really focusing on avoiding the pitfalls. So, we were more focused on developing the client relationships as opposed to developing the sophisticated products. We are very focused in terms of strategy on like the places, we're focused on emerging markets. So those are the growth countries.
How does that play out here? How does that manifest itself practically?
So in terms of the trade corridors that are, developing, and there is the south-south trade corridors between Asia and the Middle East, between the Middle East and Africa. Those are places where, the international banks can play a very important role. Also, in terms of bringing expertise to the market, that is something that we think is second to none in terms of importance.
Anyone else on this topic before I move on?
Perhaps I could just, again, help contextualize things as well. Since the latest data that we have from the Bank for International Settlements, which tracks a bank's exposure to various countries, it includes all exposures, including loans as well as other direct exposures. If you look at the fourth quarter of last year, which is the latest data that we have, it suggests that foreign banks lending to Saudi Arabian entities dropped by $12 billion quarter on quarter. So that was the quarter in which, obviously, the liquidity issues hit the European banks, and then you can see an almost immediate reaction to that. You compare
why didn't they stop lending to Spanish and Greeks and carry on lending the same amount to?
I suspect that has also taken place. There's been a cutback in lendings to the peripheral countries too. But I think it reflects a withdrawal to the core, in that these countries are finding it politically and economically difficult to lend increasingly large amounts outside of their core domestic markets. So it seems reasonable that this should continue. Even if you go back to the 2009-2010 period, there was a period of almost 24 months when the Saudi project finance market ground to a halt. And I appreciate there were significant other factors at play, but at that time, the absence of the foreign banks, I think, was a key causal factor. So it is a genuine problem. We have seen some of the slack taken up by other entities. The government funds, the SIDF, the PIF have contributed more. We've seen the capital increases. The government has put more money into those vehicles, which has helped plug the gap. We've also seen export credit agencies fill the gap as well. So it's not hopeless without them, and certainly the Saudi banks have a bigger role to play in taking up a bigger piece of the pie. But it's not necessarily something that can be solved overnight.
Eric, how do you look at this from a risk perspective?
The environment that we've seen, which has been causing a large number of sukuks to be issued into the market, works very well for a firm like Ras Mala, because we collect money from our investors, we manage funds and portfolios on their behalf, and the greater the number of sukuks which are available, the greater the number of instruments which are available, the greater tools that we have to deliver investment returns to our clients commensurate with an appropriate degree of risk. This is allowing the investors to access sukuk funds, murabaha funds, and other saving vehicles, which help to enhance the returns they have outside of the banking system, which is offering to clients right now, very low or meager interest rates on their deposits, whereas in the sukuks, usually we're able to gap up a higher level of yield and provide a return to clients which is more commensurate with with the returns that they're actually looking for. So from an investor's perspective, and this implies insurance companies and individuals, other banks as well who want to have more liquidity on their books, this has been quite a positive impact.
If you allow me, although banks are cutting credit lines, there are a lot of cash in the sidelines, internationally and locally. And we have witnessed an alternative source of funds, i.e. private equities, hedge funds, government agencies, quasi-government agencies are all providing funds, mezzanine finance, sukuk, risk participation, different type, different forms of funding. So that's not really a major problem. Although it might be contained in Europe in terms of the austerity and the sluggish growth, but in the emerging markets across the globe, I think that's a lesser of a problem, and there are a lot of alternative source of funds.
So perhaps this is a positive thing. This crutch of international funding is stimulating things, perhaps, Abdul Mazen.
Exactly, Mike. I think this is, we should look at it, cutting funding from some international banks, creating opportunities, not only for local banks, but also for some international banks, such as Asia banks and others. Relationship with European banks, for example, been built over a number of decades, 20, 30 years ago, and cutting lines today, good opportunities for those whom would like to enter this market in the region in general. And I would say also it's a good opportunity for local banks, such as Al-Inma Bank and other, to diversify their relationship, scoring more lines with international banks, looking at the future. So I would say, yes, I agree totally. It could be big opportunities.
Perhaps I can stay with you, but in order to fulfill that need, you're going to need good people, and you're going to need that side of your institution to be thriving. And it's been mentioned a couple of times that that's a challenge in this sector. What do you think are the main ways to overcome challenges in the labor market and accessing the human capital that you need?
First of all, we have to say that, all local financial institutions contribute to workforce by less than 1%. So it's not, and we should say it's insignificant from quantity-wise. Yeah. But yes, it's well developed also. I wouldn't see it as a serious problem as it used to be 5 years ago. Today we have Saudization in local banks more than 80%, and that tells you. To fill the gap, I think the regulation here is open for Saudi banks because it's well Saudization is big percentage with local banks, and that will enable local banks to fill the gap by having also professional people from abroad. So it will be not a big issue for us here. If we look at indirect job creation, I would say it's big percentage because banks are supporting other businesses to expand and become bigger, and that create a lot of job opportunities. And from that indirect angle, I would say Saudi banks play a big role.
Yes, do you have any thoughts on that?
Well, I'm not trying to give a courtesy here, but I believe Saudis are the best talents, skillful workforce calibers when it comes to the financial sectors, and we come a long way in terms of education, training. The government, private sector, both have contributed to the developments of the most invaluable resource, and that's our Saudi labor, our Saudi workforce.
Okay, that's an endorsement. Anyone from an external perspective on this issue?
Well, there's also a numbers game, given the massive population in Saudi relative to some of the other GCC countries. The talent is there. It's just spending the effort to find the appropriate people to fill the positions and to basically train them, provide the proper training and development of those individuals is really key. So it is a process that requires a certain amount of investment. And, but in the end, it will definitely pay off.
Mike, if you allow me, investment in human resources already started, and this is at even government level. If you look at how many scholarships being given to Saudis, to study abroad, you will find more than 130,000 Saudis today are studying, in US and Europe, and I am sure that will contribute to the workforce here in Saudi Arabia. As well, new universities being established, new technical programs also being established, and I agree totally with Yasser, a lot of training being done, i.e. Al-Inma Bank did more than 14,000 training days over the last only 3 years. So I would say development started long time ago, and that will contribute for future needs.
Very good. Does anyone have anything else to add before I throw open for any questions? Perhaps if anyone has a question they'd like to ask at this stage, we've got to wrap up, but probably got time for one. No. We were that comprehensive. We've got one.
Thank you, Mr. Chairman. I just want to maybe take in the point made by Daniel on the issue of standardization of Islamic financial products. I would want to say that given the evolution of the Islamic financial intermediation over the recent past years and the efforts made by such institutions like, or associations like the IOP in Bahrain, the IPSB and the IDB is really very encouraging. And one would not expect to see over this short span of time the thing. Beside, there is this issue of differences in jurisdictions' opinion, which may not necessarily give a uniform standard accepted all over. So there is still time for the industry to grow and to standardize the product, and would still expect that more are still in the pipeline, and more efforts are being made even by this kingdom and in the development. Despite this, that did not hinder the prospect for higher maybe performance by the industry. Thank you.
Do you want to weigh in on that? I think that was fairly comprehensive, as it was anyway. Well, very good. Well, I think I'll wrap up with just one last question. If you could provide me with one risk for the next 12 months and one big opportunity to the banking sector and the financial sector as a whole here.
The risk will be for the next maybe more than 12 months, as well the opportunities. It's not only, this is short term.
Yeah.
I would say the risk is could be handling the mismatch between liability and assets in local banks. We are seeing a lot of funds going out nowadays, especially with cutting the funds abroad, and sources of those funds are short term. So we have to be careful in that. Opportunities, I think KSA in general has a golden opportunity to become the hub of Islamic banking. Yet, we need a lot of things to be done, from regulation point of view, from resources, other things. And if we work in that, we will have good opportunities and it will contribute to the whole economy.
Very good. Yes, sir.
In terms of risks, Europe, of course, a prolonged decline in oil prices, those are the major risks from my point of view. Opportunity, Saudi consumers. If banks steer a big chunk of resources in financing and targeting consumer sector, that would be by itself a diversification, a reduction in risk, and a lucrative opportunity.
Very good.
I think in terms of the risk and opportunities, one of the big factors, especially for the Saudi market, is the institutions and some of the policies that get put in place. And I think it creates both risks as well as opportunities, for the near future. And it is crucial to get it right, because this is what will get the prosperity of the country going.
Daniel.
I think the one key risk heading over the next few years is regulatory, the adoption of Basel III, how that impacts not only the global economy but also the Saudi economy, and how the banks will be affected by the implementation of certain new ratios, in particular the liquidity ones. The opportunities are probably too vast to mention, but I name one, I suppose, that the housing market, I think, in Saudi Arabia is clearly, as we heard from our predecessors here on this panel, that's clearly a very important sector, and I think the banks have an important role to play in that as well.
Eric?
I think in terms of opportunities, really, it's for Saudi Arabia to become the regional center and the regional hub for the GCC and the broader region, as opposed to just being the largest national market at this point in time. And that's a real opportunity which is present right now. In terms of risks for the banking system, I think they're rather minimal. You know, the banks are well capitalized. The loans are mostly to government entities and those corporates focusing on government-related products. So really, the risk is, I think, to miss the opportunities that sit in front of Saudi Arabia at this time.
Well, I think that's a great place to finish. I'd like to thank this distinguished panel for its perspectives, and I'd like to thank the audience for their attention. Thank you very much.